Hey traders, it's that time again, Sunday afternoon, time to do our market analysis ahead of the open this evening. We're just going to run through the majors minors today, looking at some key structure levels and potential reactions that might take place. So what we saw last week was dollar strength initially, and then we came down to the key support level of 95 on the dollar index, and we saw a brief rally in the US dollar over Thursday and Friday. Now we're at 95.65 on the US dollar, and you can see this has come into a little bit of a structure point here where we've got tip of the wick closing price, and again the market opened here, and we're seeing a rejection now of this area. So there's a couple of things that can take place right now at the current level. One would be we get a continuation of the dollar sell-off back down into at least 95, potentially 94.78. Be at this area, we'll be watching the market and taking any profits at this point, maybe leaving a little bit on to run to see if we are going to see that continued dollar weakness further down towards 93.89. At which point, if that is the case, we can then look to use old support as new resistance, as price could potentially come back up into this zone here, and then we'd look for further shorting opportunities. So what does this look like on charts that will actually trade? Well, euro dollar. If you're a member of the Live Traders Club, we got a nice short in here last week, towards the end of the week, banking just over 3%. We did that on the euro, and we also took a nice short on Kiwi, which banked just under a couple of percent as well. So that was nice. Now we're looking at a potential market movement back into impulse move, i.e. see that dollar weakness, euro strength kick in. So we'll be looking on smaller time frames to see if we're going to get a rejection of this 114.60 to 114.50 area. You can see in here, I'll just remove these right now and just try and clear up a bit of the chart so you can see what's going on. We've got a little bit of a fib rejection here. We've got clean structure level where we've seen multiple tests through here, and this is basically the correlation of the 96 level on the dollar index. So essentially we're looking for this next impulse move up into structure here, which is going to be around 115.80. The market could potentially break through that up towards the 127 extension, up towards 116.43, but this is going to be a great place to be taking off initial capital and a little bit of extra. If the market breaks through and runs up towards that extension, then fantastic. Looking at sterling, well, sterling, we've got if we look at the bigger picture, we'll just zoom out a little bit. Now, are we seeing the market basically selling off, i.e. here we've got the market impulse movement down, we're seeing a deep correction towards the 618. Now this could be a multiple of reasons, you know. Is this the people that have been in shorts for so long, just liquidating some of their positions ahead of the vote on Tuesday, or are we actually seeing a bit of buying coming in for sterling as people think it's undervalued after Brexit? Well, you know, the easiest thing to do is trade what you see, you know, stick to your rules. Worst that can happen is you lose the amount of risk that you're prepared to put into the marketplace. What I do see is maybe turmoil coming ahead for sterling. Expect to see a little bit further downside. Now we're going to see a clean rejection of this. Is this going to be a false break? If it is, any sales below 128, and we could see a nice further downside towards the 121 even handle. Now, you've got to obviously apply rules and methodology each time you enter the market. If that's something you're struggling with, then obviously the Live Traders Club will be a great place for you to try and understand a process that you can see day in, day out, done by the Trade and Train team. We give you rationale why we're taking each trade, understanding the risk measures that are incorporated with every trade, and more importantly, we help you through the entire process, so you don't get you're not feeling insecure, you're not feeling uncertain, you're confident with your thought process, the methodology, it all makes sense, you know. And at the end of the day, ultimately you're always going to have winning and losing trades, so it's about not getting carried away and, you know, being able to deal and reflect on the decision process that you made and the outcomes. And then looking back at history, providing you use a journal. If you don't, then obviously that's something, it's probably the number one tip that I can give you, is start creating a journal right now, because the best book that you will ever read is the one that you write. So put as much detail in there as you can, whether it's thought process, entry techniques, trend, you name it, entry stops. trading technique, entry technique, management, put it all in and you'll start to see patterns. Okay, so I'm expecting further downside on sterling, and this one candle here could be your false break. Now, why would we expect further downside? Forget the political views and what's going to happen on Brexit. Let's just focus on the bigger picture. If we see the double top, neckline's broken, we can see consistent lower lows, lower highs, the market breaks down. The market then attempted to pull back a little bit higher, a little bit of a corrective wave here. Then we start the impulse movement back down again on this time frame. We've seen it pull back again a little bit deeper than previously, but it's come into a nice point of structure, and I would expect if we can take out the low of Friday around 127.15, we could see this market drop down towards 121. Yen, if you saw my video the other day, I'm actually going to leave the yen alone right now. If we're going to continue to see the indexes rally based on China and US trade talks doing very well, then expect to see the yen weaken. Right now, after this huge movement down, we're seeing yen strength across the board, but this flash crash here hasn't really helped the way that people analyze yen pairs. They'll just see yen strength right now, and that could be a little bit misleading. So I think the best thing you can do is leave yen alone right now until we see a more stable picture. Give it a couple of weeks, see what happens after this move, see if we are going to see continued strength, see if we're going to see weakness, or is it just going to continue to consolidate around 109, 108. Time will tell, and until then, best thing you can do is sit on the sidelines where the yen is involved. So Swissy, we saw a nice big correction on Swissy on Thursday. Friday we saw a little bit of a rejection, indecision, and you can see that it's come back up into this trend line area. It's an area we were focusing on. You can see the market, nice couple of touches here, a break of Friday's low, and we should see further movements down towards that 0.9666. And if we just look left, we can see we've still got plenty of room before we come down into structure where the golden ratio 1618 extension comes in, which is around 9600 even handle. Moving over to dollar CAD, well, we forecasted last week as we were coming into this structure point here that we're probably going to see a correction on dollar CAD, having moved from 136.50 all the way down to 131.70. Now expect to see this market either pull up into 133.50, maybe 134. So there's potential for trading opportunities here on Canadian weakness, and if there's going to be euro strength, that could lead to a euro CAD trade. You know, think about how you can trade the correlation between the markets. So if you're seeing euro strength and dollar CAD, so euro dollar strength and dollar CAD strength, then you know the better market to trade would be euro CAD. If you don't understand that right now, drop me an email at mark@tradeandtrain, and you know, one thing I would say is it's probably worthwhile jumping into the Traders Club. You'll pick up some really good habits in there and help you analyze which markets to get involved in and which ones to stay away from. So short-term correction here on dollar CAD before I think we'll see further downside on this market. Aussie dollar, right now I'm looking for mid-term long trades based on the higher time frame. So we've seen a huge sell-off in Aussie dollar. The market's found a base around 0.7. We've had a nice little impulse. You can see here I've got a short-term trend line. I'm waiting for this market to break and pull back down towards 71, or in this little zone here, where I'll be looking for long trades to run it back up towards 74, and then next target's around 0.8. I'll show you that on the higher time frame. So you can see here we've got weekly double bottom rejection. If we break through 74, we should see this market at least reach 0.8, maybe even up as high as 0.81. That's just looking at the weekly and seeing how the weekly's moved. But you know, first market, first target will be up at 7,400. So look for further longs in Aussie dollar after a correction. Kiwi's pretty much the same, but expect Kiwi now to keep pushing long. First targets, you're going to be talking 6,900, but you know, I wouldn't want to be buying it at current price. Look for pullbacks, whether it's on the daily, whether it's at smaller time frames, but yeah, run that up towards that 6,920, and then you know, you're going to look for those extended fib targets, 7,100, 7,300. If we go back to the higher time frame, just look for those structure points. So first structure point I'm seeing on the weekly, if we break through this zone here, is going to be around 70.30. Unfortunately, that doesn't correlate with any fib zones, but I will be taking note of price at this point. Moving over to the gold chart. Obviously, if you've got any questions or want to know more about Trade and Train, you can see the website here at www.tradeandtrain.com. Gold, we're seeing a rejection now. We're seeing price consolidate. We're seeing it look at the size of the bodies, look at the wicks here being presented. Expect to see gold have a decline over this coming week, whether it's going to come into this trend line or a little bit deeper. I can't give you that information, but what we will look for is correction opportunities short term, looking to trade that market lower before we then get the next impulse move long. Let's move over to silver. Now silver's given us a nice rejection candle off a significant level, that 15.8. Looking for silver to drop down towards that $15 14.8, and then we'll look for that next move long into this 127 extension here, which is around 16.5, big number, and also the top of that weekly descending trend line. So that's it from our majors and minors this week. If you do have any questions about our analysis, please don't hesitate to email me at mark@tradeandtrain.com. Alternatively, if you do like the analysis that we present here, please hit a like and share with any fellow traders. We do have a subscription offer at the minute. It is the final offer of the year, in the sense that it's our first year's come to completion. It's been a great year, and our introductory offer is only valid for the end of this month. So that's a £99 per month subscription for the Live Traders Club. If you want to know what's entailed in the Live Traders Club, like I said, please visit www.tradeandtrain.com, because as of the 1st of February, our services will be increasing in price. Okay guys, enjoy your Sunday, and we look forward to seeing you some point on Monday. Bye bye.